You are watching the Market Watch brief overview of the key events from the world of finance. If you are an active trader or investor in financial markets, then you should keep two key thoughts in mind: the emergence of Bitcoin ETFs and the end of the cycle of increases in the key interest rate by the Federal Reserve. I'll start with the second one, because this factor has a significant impact on the currency, stock, and commodity markets. It's no secret that the yield on U.S. government bonds has declined significantly and is likely to continue to decline, moving away from the highs reached this year. Against this background, the U.S. dollar is already weakened against most currencies. But when it comes to the weakness of the U.S. currency, one should take into account the change in the value of all assets denominated in the U.S. dollar. I will pay attention to gold, which benefits more from a decrease in the yield of U.S. government bonds, but also a decrease in the U.S. currency contributes to an increase in the value of this metal. However, we should not forget about the prospect of a recession in the United States. In fact, this is the cornerstone, because if the world's largest economy does not slow down, the Fed will raise the rate in order to slow down inflation more. This needs to be understood, and as a result, carefully monitor all signals indicating a change in the pace of GDP growth in the United States. After all, further acceleration of the economy will force the Federal Reserve to raise the rate, pushing the yield of U.S. government bonds up, thereby contributing to a decrease in the price of gold. But at the moment, this is an alternative scenario. As it becomes clear from all of the above, it is the expectations of investors that have an impact on the market. This theory is very easy to confirm with two extremely illustrative examples. Firstly, gold has already updated its historical maximum, although the Fed has not yet begun to reduce its key interest rate. Moreover, some members of the Fed's Open Market Committee are talking about the expediency of raising it. But despite all this, government bond yields are declining, indicating that investors are waiting for a change in the course of the Fed's monetary policy. I will emphasize that they are just waiting. Investors in the cryptocurrency market are also waiting for approval of applications for the creation of a Bitcoin ETF. If you look at the Bitcoin price chart on a daily time interval, you will see how its price has risen by more than 2.5 times over the past 12 months, and by about 60%, awaiting approval of applications for the creation of a Bitcoin ETF. Just think about it, more than 60% of the growth in less than 2 months is based on the expectation that something will happen. Of course, we are talking about a very specific event that is being discussed by all the world's media. But anyway, these are just expectations, because the U.S. Securities and Exchange Commission may delay its decision for a long time, which may eventually result in sales in the cryptocurrency market. As well as an unexpected increase in the Fed's rate, it can provoke a very strong wave of sales in the precious metals market. That's all I have. Follow the news carefully, and be prepared for all the surprises of the market.